Good morning. Week that I don't know. We kind of had a soft week in most of the grains. Corn down 4 cents. Chicago Board of Trade wheat down 6.5. Very similar declines. Soybeans, however, down 29 cents. Pretty big losses in the soybean complex. Minneapolis wheat the opposite direction, up 3 cents for the week ending December 13th. Live cattle still showing gains, although we may see potential for a turn there, but fat cattle up 240 for the week in the Feb contract, and Jan feeders up 77 cents. Outside markets still strong in the precious metals. Gold up $85, breaking out of that pennant formation, poised to go to new 6,000 year highs, and silver making new 6,000 year highs again, up 2.954. That was up 6% for the week, but actually we had a downside reversal Friday and took away, we were 10% higher for the week. It took away about 4% of that. Crude down 2.64. Boy, that's making energy prices cheaper. We had a USDA report in the grain side, the major fundamental. The USDA report was considered bullish corn and soybeans and bearish wheat because they raised the ending stocks, the U.S. ending stocks in wheat 11 million bushels more than traders expected at 890 to 901. In world ending stocks raised at 2.09 million metric tons from 272.78 traders' expectations. The USDA at 274.87. Corn, though, ending stocks in the U.S. were 95 million bushels less than traders expected. They expected 2.124, actual 2029. And then the world ending stocks, 1.56 less million metric ton than traders expected 280 plus, and got 279. And in soybeans, 12 million bushel less U.S. ending stocks at 290, unchanged from last month versus trader expectations 302. And world ending stocks down 0.04. So actually the report was bullish corn and soybeans, bearish wheat, but actually the markets mostly went down for the week anyway. So here's the charts. Maybe it tells a little better tale. This is the yearly chart. There's our low in August. And prices, we've got an uptrend going. We're probably against that uptrend when we close lower Friday. So actually, most of the losses came on Friday. This is not a bad place to be a speculative buyer of corn. Or if you need to re-own corn that you sold at harvest time, this is right up against that trend line, a good risk versus reward place to do that. In the soybean complex, we had a pretty sharp rally here once we realized China was going to buy grain. We had a head and shoulders top. We broke the neckline, dropped down. And right here, we're just about here to filling this gap. I did not think we could even fill that gap, but markets always surprise us, do more than you expect. So we're right down here in that gap area, just above it. And this is a good place. If you did not buy back grain sold previously, it's a good place to buy it back. We actually sold some grain here at 11.05 in soybeans as we were going up. We should really buy all of that back. I like buying call options even deep in the money, 10.50 or 10.60, 10 to 10.40 call options in either the Jan, or maybe it's better to buy it in the March contract right now. I would re-own all of 25 soybeans sold. In fact, we made a recommendation way down here, 10.05, I think it was, maybe right in here, to buy all of 24 sold soybeans back. And I think actually that bullish fundamental has not gone away, but we've certainly taken the cream out of this recent rally, taken all of this back, taken more than half of it back. So I think soybeans are still in an uptrend, but, in fact, would stay in an uptrend, even bouncing against this line. But you'd really have to unload all your ammunition down here at that 10.40 mark. But, boy, I think this is a good place to be buying soybean call options and actually speculative buying soybeans at that point. In wheat, Chicago wheat, sliding lower again. It looks to me like with the negative fundamentals of wheat, we might retest this previous low and get a double bottom in wheat. Really, the corn and soybeans are already going higher, but wheat doesn't have as good of fundamentals as you can see in this latest December report. In the December report, of course, they changed nothing on yield of corn and soybeans, where they're quite a bit too high, I think, in soybeans at 53 and corn at 186. They really had minor revisions in the November report, had no October report due to the shutdown. So I think those yields are still quite a bit too high. This is the Minneapolis wheat. We actually closed higher for the week, but Minneapolis has got a little nicer bottom, I think, in place. I don't think people are interested in growing wheat at $5. And quite honestly, I don't know if people are interested in growing spring wheat at $7 wheat. And I think we're going to see that throughout this year. So that's a friendly for the wheat. Here's the live cattle. A heck of a nice recovery. We regained 50% of those losses. Actually gapped up here. There's a real danger on Monday that we gap below this and leave this island formation. That could be a real problem. We did get into this gap, filling that gap for those technical traders that love to do that. We filled that gap, and so now I'm afraid cattle prices could continue to drift lower. Here's the feeder cattle following the fat cattle up, also got into that gap, filled that gap. I think this is a great place if you missed some of these other sales to get feeder cattle sold. Crude oil sliding lower this week. We actually lost $2, almost 4% in the crude oil. We're going to come down here and test this $56 area, it looks like, again. And actually, if the Ukraine war ends and Russian energy flows into the world marketplace, which I think it will, we could actually go below this 56 mark. Energy prices are dropping across the world, basically. The other markets I highlighted, there's that gold. You had a potential top, but we hung around here too long. Now this is a pennant formation. See that pennant formation? Those are continuation formations, continuation of the uptrend, where gold has basically doubled in the past year and a half. And now we are coming up to test those old highs. And I would imagine that gold will break those old previous highs. And here's the silver market, which has already done that, our recent high. And obviously we actually went back above it, came back down here. This is a great place to buy silver. Look at silver. Silver has gone up essentially from 50 up to 65. That is a 30% gain in the past 3 weeks of silver. Wow, what a dynamic market. And the other thing is silver actually had a downside daily reversal, went to new highs, new recent highs, closed below the previous day's low, and closed below the previous day's any range of prices. That could be a downside reversal in silver. The question is, does that signify a potential top in silver? We've been there, done that a few times, but look at this formation. You could come back down here and test this 55 breakout mark, or even the 60, but it certainly looks like we could find some follow-through weakness in the silver precious metal. But gosh, how much it's gone up 30% in the last 3 weeks. Certainly it's been running away on the bull market side. So the last chart I wanted to show was the dollar index showing significant weakness. We had a cut of 0.25% on the interest rates on this week when the Federal Reserve met. And the other thing that the market anticipated a 0.25% cut, but they didn't anticipate the Fed's announcement that they're going to pump $40 billion of cash by buying treasuries and injecting cash into the money supply. That is also a very inflationary type measure. So it's interesting to see the Fed do that. Are they countering? The fact that we have virtually no immigration in the U.S. is probably going to have a little bit of sag effect on the economy. I think housing costs and a lot of the inflationary pressures, when you have 1% less population coming in, unvetted, and maybe even a lot of deadbeats coming in to the United States each year, dragging on our economy, that obviously has an impact. But you could have some easing in inflation. But the Federal Reserve, we have a gap lower in the dollar and weakness, and this trend is now down. You could say we've broken this mini uptrend. Actually, the dollar weakness could help grain commodities a lot. And you could see the consistency here. Gold and silver running to new high. the dollar showing weakness. The rest of the world may be losing confidence in the U.S. economy. And certainly the dollar showing weakness and gold and silver at the same time, those are consistent. Perhaps the U.S. dollar is going to be deflated even more, which is good for export dependent commodities like the grains. So I think that's actually supportive to the grains. So you see, we do have some dynamic things happening in the marketplace. Certainly, corn and soybean fundamentals are improving. China has been buying actually even some pretty big unknown purchases of corn, and China buying soybeans and unknown purchases of soybeans. Yet the commodity, the grains have been going down the last few weeks. Actually, I think this might be a very good time to buy back, buy soybeans, corn, and wheat is kind of the laggard, but certainly any of the grain commodities. I can see developments happening with the weaker dollar and the fundamentals improving. And USDA still hasn't cut the yield where it should be in corn and soybeans. So there's some positive fundamentals that will be discovered here in the next few months. And we could probably see those grains going higher. Good place to be buying grains probably early this coming week. Hope you have a great weekend and good marketing.